If you ever asked yourself, what is the cancellation of debt that happens in a short sale with a 1099-C, you've come to the right place, although the answers may not be what you expect. Hi, I'm Dohn Thornton. I'm known as Don the short sale guy because I've been doing short sale investing here in Florida for almost 20 years, and I've helped well over 1,500 homeowners get out from under properties where their mortgage was upside down and they were facing foreclosure and complete ruination of their credit. In this video, I'm going to talk to you about what forgiveness of debt means, what a 1099 is, and why it affects you from a point of view of tax implications. I'm going to also go into what the two circumstances that can help you avoid having to owe the IRS any taxes on a short sale, and who you should work with if you decide to do a short sale. So what is a 1099-C? Basically, that is a form that any financial entity has to give anyone where a debt is being canceled or forgiven. So, in a short sale point of view, let's say that you owe $200,000 on your mortgage, and you sell the property in a short sale for $150,000. That means that $50,000 of your mortgage debt was not covered. So now the mortgage company has a choice. Will they pursue you for a deficiency judgment for the $50,000, or will they just say, okay, you know what, we're just going to cut our losses and we're going to forgive the debt, and you're not going to have any more. We're going to close it out, and that debt's going to be forgiven. So that's what a forgiveness of debt means. So when they do that at the end of the tax year, so let's say, for example, that you did your short sale closed in August of 2021. That means in January, then the mortgage company is going to send you a 1099-C, which details that the $50,000 that they wrote off and forgave, they're going to notify the IRS about that. That's what a 1099-C is. Now, what a lot of people don't understand is that a 1099-C is going to happen in a foreclosure situation, no matter what you do, if you do not pay off the mortgage in full. For example, if you do a deed in lieu of foreclosure, so you say, I'm going to give the bank the keys, and they're going to accept ownership of the property. They're going to put the property up for sale. They're going to sell it eventually, and then if the proceeds of the sale do not cover the full payoff, then again, you will get a 1099-C from them. If you let it go to foreclosure auction, and at the auction it does not sell for a full payoff, you will get a 1099-C. So short sale, deed in lieu of foreclosure, or a foreclosure auction, either way, you're going to get a 1099-C no matter what. So it's unavoidable. Okay, so make sure you understand that. So the what you need to be aware of is what are the tax implications and what kind of things you can do to avoid having to pay for or owe taxes on it. Okay, but before I get into that, I'd love for you to go down to the comments and leave me a comment. Let me know what you think about this video. Let me know what you think about the subject matter in general. Do you have any ideas of videos you'd like for me to do about short sales or foreclosure or real estate investing in general? I'd love to get hints about what you want, and I can make a video for you because I've been doing this for 20 years and I got a lot of knowledge up here. Okay, so the tax implications. So, like I said in the previous point, you are going to have to deal with that 1099-C at some point, and that's a question for your tax preparer. Okay, so what I don't suggest is that you go to H&R Block or Jackson Hewitt or something like that. You need to go to a CPA, okay, because this is a serious thing, and the if left untaken care of, then yes, they could raise your tax bracket. It's basically like, let's say if you made $80,000 as an employee in the previous year, they're going to tack on that $50,000 as income. So now your income is $120,000 instead of, well, or 130 if it's, I forgot what I started with. Let's say if it's 70,000 and you add 50, that's $120,000. So that means that you're probably going to have that's going to get you in a different tax bracket. You may be subject to more income tax. So that's what the implications are for a mortgage amount that is forgiven, which a lot of people don't want to do, and for good reason. Why would you want to, right? So that's really the crux of the matter is, okay, so we have this document that is telling the IRS that for all intents and purposes, we earned an extra $50,000, even though you didn't get me any money for that, right? But the IRS considers it earned income. So you have to have a strategy or know what to do to be able to avoid having to pay taxes on that. So what I would love for you to do before I tell you how to get around that, because you go down to the corner here of the screen, there's a button that is a subscribe. So you can subscribe to my podcast, or excuse me, my YouTube videos, my YouTube channel, and you can get notified whenever I upload a new video, and that way you can check it out and not have to, get on a keyword search or whatever on the search engine. You can just go bing, you hear that, and it comes, you get notified that a new video is out. Okay, so please go down, subscribe. I'd love it, and you do me a nice solid here. All right, so the main question that you've been waiting to find out is, so what do you do? How do we avoid having to pay taxes on this? Well, first of all, I want to give you a disclaimer. I am not a licensed tax advisor. I cannot give you tax advice, okay? What I can tell you to do is go to a certified public attorney, accountant or attorney, someone who is a tax licensed expert. However, what I can do is tell you what my licensed tax preparer has told my clients throughout the years. And the first thing is that if you include your mortgage in a Chapter 7 bankruptcy, then automatically the IRS does not consider that a taxable event. That's in the tax code. You can look it up on the irs.gov, and you can look at mortgage amounts forgiven with Chapter 7 bankruptcy, and you'll see it right there. You won't have to go into talk to a tax preparer about that, because that's just the way it is. It's very cut and dry. Any debt that was included in a Chapter 7 bankruptcy that was forgiven is not considered a taxable event by the IRS. Okay. Now, the other thing, the much more common way to do this, and this is what, again, my tax preparer and my tax professional has told my clients, is that you're taking a huge loss for that tax year, for that fiscal year. So you can declare financial insolvency for that tax year, and you can get most, if not all, of that debt taken away as a taxable event for you. But again, go to a licensed tax authority advisor, but if you can bring that up to them and say, hey, tell me about insolvency and how that will help me get away or get out from under any tax liability for this mortgage amount that was forgiven. So what I want you to do is, if you are thinking about it to do a short sale, or you're a homeowner, I want you to go down to the description of this video, and there is a link to my website, donbuysHouses.now.site. In that website, there are a number of places where you can fill out a quick form, your name, your email address, and your phone number, and it will go right to me, and I can reach out to you, and we can discuss how I can help you answer any of your questions, and give you as good advice as I can give you about what you should do with your situation, and help you out with a foreclosure if you decide to trust us with your business. We would love to have for your business. We've been doing this for 20 years. My company has an A+ rating with the Better Business Bureau, and we've helped a lot of people, well over 1,500 homeowners in our period of time. If you are a real estate investor and sometimes you come upon people that are upside down their mortgage and you don't know how to help them, you can joint venture with us. And go down to the description, like I said, and you can also reach out to me, and we can talk about how we can joint venture together and help homeowners, and also make money. Okay. And if you're a real estate agent and you don't want to do short sales, if someone comes to you and they say, I want you to list your house with me, but it's a short sale and you don't want to do it because they're a hassle, if you don't know how to do them really well, then you can send them to us, and we can give you a 25% referral fee, and you can make some money on the deal and not have to worry about, the ins and outs of a short sale, which can drive you crazy sometimes if you don't know what you're doing. Okay. So thank you very much for watching my video, and I look forward to seeing you in my next one. Thanks.